Hey, welcome to Sustainable Investing. My name is Mike, and in this video I'm going to break down and explain the new price target from Cathie Wood and ARK Invest for Tesla's stock price in 2025. Let's get into it. On Friday, March 19th, 2021, ARK Invest released their new price target for Tesla in the year 2025 on their website. I've added a link to their paper in the video description. Last year, ARK Invest's price target for Tesla was set in 2024 would be $1,400 post-stock split, which would be $7,000 per share before the stock split. Since then, they've updated their models based on new information we've gathered in the past year from Tesla's 2020 fiscal year earnings, as well as announcements from Battery Day and other news. Their new expected price target for Tesla in 2025 is now $3,000 per share. Their bear case is $1,500 per share, which they assign a 25% probability, and their bull case is $4,000 per share, which is also a 25% probability. These forecasted price predictions are based on a model they used called the Monte Carlo simulation model. This model used 34 inputs and generated 40,000 possible outcomes for Tesla's price in 2025. So just for reference, Tesla's current stock price as of market close on Friday, March 19th was $654.87, which gives them a $628 billion market cap. A price target of $3,000 per share would represent roughly a 350% gain and a market cap of close to $3 trillion. Some key highlights of their updated model include moving their price forecast from 2024 to 2025, refining their estimates for Tesla's capital efficiency, adding the insurance business to their model, adding assumptions for a human-driven ride-hailing service, and they increased the probability of Tesla achieving fully autonomous driving within 5 years. In this table, they give some important estimates of Tesla's businesses for the bear and bull cases and compare them to the actual numbers reported by Tesla in the 2020 fiscal year. So for electric vehicles sold, Tesla actually sold 500,000 vehicles in 2020. Under the bear case, they would sell 5 million vehicles in 2025, and under the bull case would be 10 million vehicles. In terms of revenues from their electric vehicle business, in 2020, Tesla made $26 billion in revenue. In their bear case, they would make $234 billion in revenue, and in the bull case, $367 billion in 2025, which would be more than a 10x increase over a 5-year period. For insurance, the bear case has them making $23 billion in revenue in 2025 and just $6 billion for their bull case from insurance revenue. Initially, I was confused that the revenue came down for their bull case for their insurance, but they explain later on in the paper that if their robotaxi business actually launches successfully, which is in their bull case, then the insurance fee would likely be incorporated as revenue for their platform fee rather than just revenue directly from insurance. They also include 2 lines for revenue from both human-driven ride-hailing and autonomous ride-hailing, which would be their robotaxi network. For the bear case, human ride-hailing would generate $42 billion in 2025, but $0 for autonomous ride-hailing because robotaxis don't happen in that outcome. For the bull case, $0 are made from the human-driven ride-hailing business because all the focus would instead be on the robo-taxi business, which they estimate would generate about $327 billion in revenue. Gross margin on their EV business is expected to be about 40% for the bear case in 2025 and 25% for the bull case. Total EBITDA margin is expected to be pretty similar between the two cases at about 30%. So here are some other highlights from the paper. From ARK's bear case, they expect Tesla's annual EV production to be about 65% growth per year for the next 5 years, whereas in their bull case, they're expecting that growth to be about 90% per year. After Tesla reported recent numbers on capital expenditures from 2019 and 2020, and their announcements from Battery Day, including their new 4680 cell, ARK expects Tesla's capital efficiency to continue to improve over the years and will allow Tesla to reach between 5 to 10 million EV sales per year. ARK increased their probability for Tesla to launch fully autonomous driving to 50%, which is an increase from 30% for their 2024 prediction. ARK also expects that the new robo-taxi business, if it launches successfully, could represent 40 to 50% of Tesla's total market cap, which assumes that 60% of Tesla's electric vehicles sold come with autopilot and serve as a robo-taxi. They also added in human-driven ride-hailing into their model. They suggest that Tesla could launch a human-driven ride-hailing service in preparation for launching their robo-taxi network, and this would help establish early on some highly profitable recurring revenues and would also limit the downside of the possibility of their robo-taxi business failing. As for Tesla Insurance, ARK noted that currently Tesla Insurance is only launched in California, but that Tesla intends to expand to multiple states over the coming years. They estimate that within a few years, about 40% of Tesla's vehicles sold could have Tesla Insurance, since it will be more cost competitive, since Tesla's able to collect real-time driving data, and since Tesla's vehicles are generally safer. And as I mentioned earlier, ARK is hypothesizing that if robo-taxi networks become successful, that they'll actually incorporate the insurance into the platform fees. An important point to keep in mind about ARK's new price targets and their model is that it only incorporates 3 of Tesla's businesses: their electric vehicle business, their ride-hailing business, and insurance. Currently, their models don't account for their energy storage business, their solar business, or their investments in Bitcoin. And Elon has said in the past that he thinks their energy business at some point could be even bigger than their electric vehicle business. I personally feel that by not including these other businesses into the price prediction model for 2025, it makes even ARK's bull case seem pretty conservative to me. Everything in this world runs on energy, and as human civilization transitions from burning fossil fuels to generate that energy to more renewable and cleaner sources of energy like wind and solar, and using large grid-scale batteries to store that energy, I think Tesla's energy business could have tremendous growth potential, and it shouldn't be overlooked. So don't be surprised if there's even more upside to ARK Invest's price targets for 2025. So what do you think about ARK Invest's new price targets for Tesla? Do they seem realistic to you? Do they seem too conservative? Or do you feel that Tesla's stock price has run up so much in the past 2 years that currently the stock is overvalued, and expecting it to jump more than 300% is just too unrealistic? I'd love to hear your own thoughts on this, and even what your own price target is for Tesla in 2025. If you enjoyed this video, I'd really appreciate it if you hit the like button. It really helps the channel. And also don't forget to subscribe so that you can see future videos. And if you want to follow me on Twitter, you can follow me at Sustainable Investing with Mike. Bye for now.